Hello traders, how are you doing? This is Ed. Welcome to Ed Traders. So today I want to teach you how to draw the level of support and resistance. So level of support and resistance are very important levels. They're very key levels. Yeah, so they're one of the POIs you have to understand in order for you to know the price movement. So one of the things that you have to know before you draw the levels of support and resistance is to know the approach of the market at that time, the kind of trader you are when you're approaching the market, because there are different types of traders. We have swing traders, we have day traders, and also we have scalpers. So for swing traders, they mostly use different time frames compared to the scalpers and probably maybe day traders. But most of the time, day traders and scalpers maybe they usually use almost the same time frame. So according to me, when you start approaching the market as a swing trader, probably you have to first think of weekly or monthly, drawing support and resistance in terms of weekly or monthly time frame. So first you go to something like monthly time frame. This is the GBP USD. So one of the first thing you do on the monthly time frame is to note key zones where the market has been bouncing off frequently. So you note key zones where the market has been bouncing off frequently. So for example, if you check on this currency pair, you realize that there are specific zone where the market has been bouncing off for a long time. So this is a zone here, this zone here, this zone, at this zone. So you look at the zone the market has been bouncing off from, but they are on the same line, almost on the same line. So after marking a line like this, you know that that's a very significant zone that the market will be reacting to again and again and again. So after marking those zones like that, then you can do yourself a favor by marking the extremes of those zones you have marked. When I say extreme, you have to pick the highest point of those zones and the lowest point of those zones. So first, if we start choosing the highest point of this zone in terms of direction, the highest point is the point on the upper side. So as we have marked this zone, sorry, let me just remove this thing on my chart. Okay, move it. Yeah, no, okay, it's out now. So the highest point on this zone. Okay, the highest point on this zone, considering these points here, let me just mark it. I just want to place two lines. So let's check on the left. We can see that on this zone here, the top of this wick is the highest point, you know. If you look the left, you will find that almost the highest point of this zone. Then the lowest point of this zone, probably can pick the low of this candle body here. Let's see. No. The lowest point is the low of this wick. The lowest point is this week. Yeah, so you can see that this is on the highest point here, the lowest point is here. So now after picking the highest point and the lowest point of that zone, the next thing is for you to understand the concept of wicks. The moment you see in that zone there is wicks, some wicks, it means that the market has been rejecting in that zone. So in the monthly time frame, what it means is that when the market comes to that zone in the monthly time frame, it is reflected back, it returns back from where it is coming from, which means it's a very important zone. So when we are drawing these lines, it's critical for you to draw it for the lines to pass through a wick, but it will not be so much good for the lines to pass through a body of a candle, you know, because the body of a candle means that zone the market really did not close past that zone. It passed through that zone, you see, and closed beyond that zone. So it's supposed to at least cut through a wick, but not through a body of a candle. And also, it's also important if in case we are allowed, we are supposed to confine only the wicks. That zone is supposed almost to contain only the wicks, okay? Something of that sort. So let's see. If we start with the first line on top, let me just make the first line maybe to be red so that I'll be able to differentiate. So the first line on top, you can see that this line here, it is passing through these bodies here, the body of these candles, it is cutting through the two bodies. You see, although it is at the extreme of these candles on the right side here, it is cutting through the body of the candles on the left. So let's just adjust it to the tip of the body of this candle. So let me try to adjust it to the extreme of the body of this candle. Yeah, it is cutting through this wick, this zone, this wick, yeah. Yeah, and it is cutting through the body on the right and the body on the right, which is not good. Why? you have to give the price that you have to give more priority is the price on the right, because it's the current price. As you go to the left, probably you can give it less and less priority, but when you are coming to the right, give it a bit of a more priority. So when we look at the right, probably at this zone here, we can see that this candle, this line, red line, did not touch the body of this candle here. So the one I'm talking about is this zone. It did not touch the body of that candle, which is a bit dangerous. So we have to ensure at least that it touches it. But when it does that, you can see on the left, extreme left, it is cutting through the body of these candles. There's no problem, because at this extreme left, we want to give them a bit of a less priority. So as we are going on the right, you can see that it wants also to cut on this body here, so we adjust a bit lower so that it just only touch the end of the body. You see the closing price generally. So the closing and the opening price of those candles. Then let's go to the right. If you go to the right, you can see it is cutting through this one. No much problem, because it's only one. On the right, you can see it is cutting through this and this, which is a bit critical. So we can adjust it a bit up so that it is at the top almost, because on the right you have to give them more. You can see this one, it is balancing, even if though it is breaking through some very little. Then on the left, it's a game of making that probability to be so a bit of more accurate, using the principle I'm teaching you right now. So the one on the lower side, the black line, you have to see, is it cutting through a body? So if you look on the extreme right, you can see it is cutting through a body. But is it necessary? It is necessary, because there's no reason, there's no way where you can mark the highest point of this candle and the lowest point without you cutting through the body. So what do? Look at those candles first, because we have first to focus on this candle, sorry, on the right, and then check on that candle. Do we have any zone that was looking like a range? So if you look at this zone here, it was looking like a range. So that zone that looked like a range, the highest point of that range and the lowest point of that range have to be marked. So the lowest point of this range is here, which means any point, you can see also this one also form the same range, almost at the same level. So this is a very critical zone to us, the highest point of that range and the lowest point of that range. So that's a very critical zone that is of significant to us. And then there's also another problem probably we can have at that level. The problem now is that we don't want this zone to be big. You see, we don't want this zone to be big. So in order for us to tweak this zone in such a way that it's a bit smaller, we can use the range on the right, sorry, this range we have used here on the right, and get the half point of that range. So the half point of this range, you can just measure, maybe using Fibonacci from the top to the bottom, you see. And then we can, I don't know, am I even doing any measurement here? I don't know. Okay, so the Fibonacci. Or maybe you can just draw the box. Those boxes, when you draw them, they can give us the half point. So this box, triangle, rectangle, this rectangle. Okay, so if we draw it like this, we find that on the middle point, this is the middle point. On this middle point, this is the midpoint of the range. And if you look even on this candle here, let me just make it to be blue. Okay, so that middle point, one thing you can note is that on the left, you have something like head and shoulder, this pattern. And then on the left shoulder and the right shoulder is almost at the middle point of that range. That's super cool. So now we have gotten at least a point where our zones have been made to be a bit smaller. So what do? You start by marking the zone on the top. You mark the zone on the top, maybe with something like a red. Mark it red. Then the one below, you mark it also with something like a blue zone. I don't know. Let's just place them blue, okay? So then after that, you remove the lines. I don't care. I don't want to use these lines here. Maybe you can just maybe use those lines, or you just use the zones. For me, I really usually like to use the zones. So that within that area, since the zones is big, you have two zones clogged together. So the moment the market pass through one zone, you can just go maybe something like weekly time frame. On the weekly time frame, so in between those two zones, you can do something like an intraday trade, whatever it is here and there. And one thing you have to wait is for the market to make a pattern on all of these zones, something of that sort. So for example, here you can see something like something that was almost looking like a head and shoulder, but here it formed something like a double top before crashing down on the weekly time frame. So that's just one of the zones. One thing also that you can do is that after you have seen the standard of the zones here, you can just take one of the zones there, clone it, and then after cloning it, you can just draw it, use it anywhere down there. You see, you can just use it. You can just use it any place down there. You see, so there's this zone up here, there's that zone down there. This zone up here, I'm just marking them, I'm sorry, I didn't even tell you, but I'm just seeing them automatically using my eyes. So you can see there was an extreme of this zone here. There was on the left, I'm not giving them so much priority, but you can see at this, starting from this level here, we have a zone. So this zone is like our standard, the size of this zone, our standard here, you can see, So you can see almost this zone is like the standard, because the market almost, when we take it to a certain point, the market usually react to it. It's just like our standard, you see. So this zone here, it's a beautiful one that has given us that standard. When you come down here, also we can tweak it a bit on the weekly time frame. So you can just go to the lower time frame, something like daily, you adjust it, whatever it is, but it will be looking beautiful. So when you go to a lower time frame like daily, probably on those zones you are looking forward to see uh, maybe chart pattern, things like head and shoulder, whatever it is, at least to be able to let you know the next step to take. So that's it, guys. Thank you so much for listening to this video. Ensure you subscribe, you like this channel, so that you'll be able to get more content from me. So thank you so much. I'm out.